Do the gains look sustainable from here?
Well, Emery, it certainly is hard to put into words the scope of unrest and the anguish that has really gripped the country. And with that in mind, sometimes it feels almost inappropriate to say what will the economic impact of this be. And indeed, strategists I've spoken to have had a hard time or even hesitate to even begin to answer this question. But one thing many agree on is that it's just the scope of gains we've seen since the March low, if anything, might force investors' hands from this point. Jay Powell put it well on Friday when he talked about 40% of people who make $40,000 or less are unemployed in the U.S. And Andy Brenner from NatWest says that right there, a lot of tension in that statistic, but still, it's the Fed support that's going to win out for markets at the end of the day. And we saw in the 1960s that civil unrest doesn't always lead to turbulence in the markets. Now, if one thing is going to have a really big impact at this point right now, it's political risk, and you can see that very clearly when you look at the VIX curve. So looking at options pricing, it's October options where you see a huge premium. Investors bidding this up for the election period, saying a lot of volatility is likely to come. It's likely to hit in October, despite the rest of the curve starting to flatten as economies start to reopen. So right there, that kink in the curve, that right there is political tension that keeps getting priced in, especially over the weekend.
Yeah, and that chimes with JP Morgan's additional note this morning, which talks about monetizing the volatility, selling call options on your cash portfolio holdings or buying put options. Dani, talk to me about the biggest risk for U.S. equities. Is it trade? Is it civil unrest? What is it?
Yeah, well, when I mentioned those strategists who didn't really want to price in what civil unrest would mean, one thing they were more than happy to talk about how it will impact markets is U.S. and China trade tensions. And you can see it really in how equities are behaving this morning. U.S. futures, they start out flat, slight gains in Asia, and they attribute this to Trump, or more correctly, what Trump hasn't done. On Friday, he condemned China, but at the same time didn't take any draconian measures. So they say the real risk here is in stocks exposed to China. So what you're looking at here is U.S. stocks that have a lot of sales where they sell to China, or just China exposure in general, have outperformed from the bottom. So this is the real risk. If we get increasing tensions, those stocks have done extremely well, so they might fall back down to earth. Manis, Anne-Marie?